How does investor funding work in 2020? This video talks about the 3 changes you need to know about if you're a startup trying to raise investor cash.
COVID-19 hit us in early 2020 and had a very direct impact on not only the global economy, but on the startup market in particular. Those that are looking to fundraise from investors, those that are trying to launch and grow businesses, or those with new innovative ideas find a really unique landscape to work within right now simply because of the time that we're in. Now, since the beginning of 2020, when we first started looking at how does this impact the startup scope, we realized it was going to be very different. Now, at first, everybody theorized that this is going to be just like any other traditional recession. This is going to be something that creates certain things that we've seen before. And what we found was that that is not the case entirely. The one thing that did stand true is valuations in a recession or a down economy tend to go down. That means that if your startup was valued at $100,000 last year in a decent economy, and this year the economy is a little bit more volatile, you might now be worth about $75,000 or $60,000 as a valuation. If you've never done your valuation before, no worries. In the bottom of the post connected to this video is a valuation calculator that you can use to see what your valuation is today. But all of that aside, we've seen that other things that we thought were hard, fast rules are not at all hard, fast rules in the COVID-19 era. For instance, one of the biggest surprises is that startups, brand new pre-revenue startups, meaning $0 in sales, startups are getting funded by investors when usually that is not the case. In a recession, investors tend to take their money and put it into more established businesses that are safer. It's just a lower risk opportunity for them, and they want to make sure that they're securing as many safe deals as possible when the economy is so wishy-washy and not quite predictable. In this era though, 2020 going forward, everything is changing and startups are getting some serious love. They're getting invested into even if they have nothing more than a basic proof of concept, and that is extremely rare. That means that if you have an idea, if you have a concept for a business, even if it's still in the stage of it's barely more than a thought in your head, you actually stand a chance of capturing an investor's attention. And that brings me to the next thing that is different about this economy. People are more interested in taking virtual meetings, thanks to everything that COVID's done to our daily life. That means that investors you previously could not get a hold of, get in touch with, get on their calendar, they're actually accessible and they're taking meetings like crazy. But it does mean that you have more opportunity available to you on a more regional level than you would otherwise. So instead of hopping on a plane and having to go to Silicon Valley to meet with your favorite VC, you can just pitch them over the computer. Great, handy, no problem. The other thing that's changed, the third huge pivot, is the way that those meetings are conducted. So instead of going to a pitch event to see an investor or going to an investor one-on-one and meeting with half of your founding team and that investor, you're now able to do it over a Zoom or a Teams meeting or whatever your video conference choice is. Now, that being said, you cannot and should not bring your entire founding team to that meeting. Normally, the meetings we're seeing are much shorter. 5, 15, max 30 minutes in investors giving to a startup to pitch them online. So your team should not be full of a whole bunch of silent heads and then you're doing all the talking and they're really just there for moral support. The investors are getting frustrated at the larger groups and they just want to see the 1, maybe 2 founding team members that have something valuable to say, and they don't want anybody else in that pitch. So be very careful. If you've got other team members, don't invite anybody that doesn't have something very specific to say or some tangible or technical or business acumen value to bring to that meeting. Now, With all of that being said, you've got a ton of opportunity ahead of you in terms of finding a great investor for your idea and actually getting in front of them to pitch them. It's easier than ever, and it's really exciting because it's not what we would have expected had you asked back in early 2020 how this is going to go. So because of the era that we are currently living in, you should make sure you're taking full advantage of it. Use the download at the bottom of the blog post referenced below and make sure that you update your valuation and your business plan. Your business plan is going to be completely overhauled if you've done it in the past or 2019 or earlier. You're going to need to update it and make sure that you adjust your valuation according to what your new projections show you. Now, if you run into any trouble, if you need any help at all with your business plan, with your valuation, reach out. We will be glad to support you and help you through that. In the meantime, take a look at the tips below in the post and see what the trends are looking like in terms of the economy and the startup market today. And best of luck as you build out your business plan and change some of the visions for the growth of your company.